So do remember to post your questions on the Q&A tab. For those on the physical one, you can just raise your hand and we will come back to your questions later. All right. Okay. Also, just to share is that the session will be recorded and actually will be posted on the YouTube channel for PhillipCapital page. So no need to worry about missing a slide or whichever. You can go back and review the YouTube recording when it's up. Should be up by around next Tuesday to Wednesday. All right. when you click something 它就不会做。因为我在讲话，我在看东西嘛，在讲话。Inform that we'll take 2-3 minutes delay first. All right, so we let more people join in the session. I think there are some finding parking or ending their work, haven't joined in the Zoom yet. So let's wait for a moment. We'll start by 6:40 confirm. Not to worry, yeah. So just do stick with us. We'll start very shortly. All right, for those that have just joined us, both physically and online, not to worry. All right, we're still showing the running slides because we are expecting a slight delay so that we allow more people to join us online as well as the physical session. All right, we'll start by 6:40 sharp, not to worry. All right. Also, just to share again, all right, other than the promotions that you currently see on the screen running, all right, we also have other promotions on our homepage. You can also join us on YouTube Live, or you can review the recording on YouTube Live after the session. So don't need to worry about missing a slide or something. Okay. So later on in the session, we'll be actually discussing both on the Hong Kong market, the outlook, before we move into understanding more about how the warrants work, as well as giving you the live examples of how warrants can actually help your portfolio, magnify based on hedging, leveraging, or expanding your gains exponentially. Yeah, so later on, all this will be discussed. So do look forward to it. I'll start very briefly with the promotion sharing first before we move into the topic proper. All right, so very welcome to everyone that just joined us both on the Zoom as well as a physical session. All right, my name is Huan, I'll be the host for today. All right, so we do have a guest speaker later, Jamie from Macquarie, who will be sharing more about the warrants as well. So do look forward to our sharings later, both on the Hong Kong market as well as the warrants and the hands-on application examples. Right, so currently for the promotions that we do have running, the first one is referring a friend. So if you have friends or family members that are not yet account holders of Phillip Securities, you can actually refer them, and then for each successful referrer that fulfill the criteria, you get up to $68 per referrer. So $68 per referrer that is successful. All right. Second, we do have an ongoing share financing promotion for both Sing dollar, US, and Hong Kong dollar. All right, so if you are going to use leveraging or you're going to use your portfolio as a leverage to purchase more shares first, before you make payment to it, or even for a short-term position, you can actually consider using the share financing. This is current promotion. Next, we have this very great, exciting promotion. If you have not yet traded warrants before, and today what we have shared to you can inspire you and let you want to consider trying, this promotion can actually incentivize you, because this promotion, as long as you trade 2 buy trades for warrants within the period of 1st of July to 30th of September, as long as you have not traded warrants before between 1st April to 30th of June, meaning last quarter you didn't trade warrants, this quarter you start trading 2 buy trades above 3,000 each, right? Above 3K contract value each, you will qualify and get $88. Right, so this is a guaranteed cash credit. They will credit to you by end of the promotion period by 31st of October. All right, so definitely something to look at if you are interested or considering to start warrants trading. All right, so definitely can reimburse some of your cost of trading as well, and you can even make a gain for yourself. Okay, next we do have a free SGX Enhanced Market Depth Access. So this is a free access. You can apply for it both on the Poemistry app as well as the website. So apply for it and it's immediately activated for you for market depth. So if you've always seen the market depth function but have never seen it activated for your app or for your website, do note that it's currently free for SGX. Just need to apply for it under the rewards tab. Under the P3 mobile app, if it's under the Me tab, there is a market data there. You can actually apply for the market tab as well. Okay, lastly, we do have this Telegram group where we share market updates and insights. So if you are not yet in our Telegram group, just scan the QR code. You can actually join our Telegram group for the sharing of more information, and also events like this, we do also share on the Telegram group as well. Okay. Okay, so let me start the session proper. All right, so this is the full topic. Of course, I'll be mainly touching on the Hong Kong market itself. All right. Okay, so let me go into it. This is a disclaimer. So I'll be sharing, when I share some companies' names that I mention or share. All right, it doesn't constitute to a buy or sell call. This is a sharing or some examples I might be giving. All right, I might mention stock names or counter names. Okay. So this is particularly the market trend, all right? So I think most of you all should be familiar. Hong Kong has been a very volatile market for the 2024 year. Right? It started off very badly, all right? At around 14,000 plus already in January. The lowest was around 14,600. And the peaking was around May. May was around 19,600. So if you see the gap between them, there's around a 5,000 gap. Right, so if you compare from the start of the year to the peak, that was around a 33% gain for a major index. Right, so actually that particular swing is actually more than even the US market if you compare that way. All right, so the Hang Seng, of course, rally in Q2. Of course, the closing of Q2 in June is not as high, it's 7,700 or so, not at the peak of 19,000 plus, but it's still a rally, good rally of around 3% or so for the first half of the year. For Q2 itself, it rallied around 7% plus. All right. So of course, why there was this outperformance is that Hong Kong market, the Chinese government has been launching some stimulus packages, some policies to help boost the stock market itself. So some of them mentioned here, I'll be sharing more later. So one of them is a project whitelist, where basically the Chinese government allow the local governments, right, to actually have specific projects for residential projects to be listed as whitelisted projects, to allow the banks to give loan to them with lower or even no restrictions. All right, so there are very low restriction given for these particular projects to allow and facilitate the residential projects to go through, and that has helped to support the economy at an overall level, because these residential projects does affect the economy in many ways. All right. Also, next, the government also launched ultra-long special government bonds. All right, so pumping liquidity, something that I think if you're familiar, the US government, they have also done it before, previously, before the QE and everything. So Chinese government also has done some of these to support the market. The third one is actually the relaxation of the property market purchase restrictions. So this is particularly important because sometimes in the past, when China helped boost the market, they normally restrict to the areas or cities that is actually more affected. or not as well to do in a sense, and they normally do not apply these restrictions lifting onto the main cities like maybe your Beijing or Shanghai and all that. But for this time around, actually for relaxation of property market purchase restriction, they actually applied almost across board, right? So even the major cities, the first tier, top tier cities also have this lifting to actually boost the sentiment within the cities itself. Okay, so the bottom is the performance sharing. So you can see in Q1 and Q2, Q1 both the Hang Seng Index and the Hang Seng Tech Index fell. For Q2 itself, both of them recovered. But overall, for first half of the year, the Hang Seng Index is up around 3%. All right, if you consider for the full half a year, and Hang Seng Tech still have a downtrend for the first half of the year. Okay. So just to share more on what will affect the Hong Kong and the China market is that first, we do still have ongoing geopolitical tensions. Of course, first we have Russia, Ukraine. So it's a very, very long story, the old story, old news in a sense. But particularly why is it important to China and Hong Kong is because Russia and Ukraine, they are technically very near and are trading partners with China, right? Important strategic trading partners. All right, so of course, when Russia accused the West of hindering and all the effects and stuff like that, technically the West also somewhat accused China of assisting Russia, you know, like maybe supporting through weapons or through aid or economic sides. So basically, China cannot avoid but be somewhat involved in this geopolitical tension. So this is something to take note of, still relevant to China market if you are looking into investing in China and Hong Kong. So next thing, of course, the Israel-Gaza peace deadlock. This one is not as related to China-Hong Kong in the sense they're not as correlated, but it's also something that will affect the geopolitical tension in terms of the trading routes that will be involved in the area, in the region. The third one is actually the escalation of tension between China and Philippines for the South China Sea. So this particular one will definitely directly impact because, of course, it's also a trading route, right? It's also a dispute between the maritime industry, all right? So, of course, it will say by percentage of GDP, it might not be very significant, but this particularly will also showcase the strength of the geopolitical powers between China and the regional area. So it's not only about just purely about the economical impact, but also maybe on the image that they are portraying on how they are showing their strength on the geopolitical sense. Okay. Give me a moment. Oh, very sorry about that. Okay, very sorry. I was informed that the music was still ongoing. All right. Okay. So do let us know if you face any disturbance or background music. All right. So thank you for updating me. Okay, next, we do have political leadership changes also. So we're going to share on that as well. So for the front side, there's actually no parties that actually managed to form a majority by themselves. So now they are going into a coalition party. So as compared to the preliminaries where people thought that the far right might be winning, end up the far right became the third place in terms of the overall rankings for the elections. So that actually caused some of the confusion in a sense in the area. And the coalition government might be good for China in a sense because the far right party was a lot more harsher in terms of their plans that they were going to bring forth against China. So in this case, China do have a slightly easier time, at least in the European, one of the major powers in Europe. Okay, for UK side, also they've changed our power to the Labour Party. All right, so the Labour Party finally won after 14 years, actually ending the Conservative rule. All right, so the Labour Party has traditionally been a bit more pro-China in the sense that they're relatively pro-China. All right, but the strategy of competing, cooperating, and challenging, this is the 3 C's that they mentioned when they talk about their relationship with China. So it still shows that they do see China as somewhat of a competition somewhere. All right, so of course the context might not be as harsh overall. And also we do expect that the new government will be a bit more balanced with their approach to China compared to the previous government, right? So next one, I think one of the mentioned, one of the clients in the physical section also mentioned about interest rate affecting some of the policies. So this is the part I'm going to mention. So currency pressure on China itself is important here. So the US Federal Reserve actually showed projected 25 basis point interest rate cut. And yesterday news, you see the market swing and everything, actually more or less convinced most of the market that US Fed have the intention or has the incentive to carry out this particular cut by this year. So that technically helped boost the overall confidence of a rate cut going to happen for this year, and that led to the market movement that you see yesterday and today in Asia. So why did it affect China so much? It's not because China directly benefit from the rate cut in the US, but more of China want to support their economy, right, in China and Hong Kong, but they are limited because if they support too much, in the sense that they do cut the interest rate on their side, they are giving a lot of pressure on their currency. Because the interest rate differential between the US and China currency is high, then the flow of funds will be moving from Asia to US, right? So that's giving depreciation pressure on China, which is not what China wants. China wants to maintain relative strength or relative stability in the currency itself. So if US have more incentive to carry out that interest rate cut for sure, right, then at least China also have a bit more room for navigation for their own currency interest rates for the next half a year. So that's why you see the Chinese currency also shifting, the Chinese stock market also moving, and why some of the REITs have been moving is because of the interest rate cut potential in US, allowing the China to also potentially cut on their side in terms of a relative term. So that's why you can see the REITs actually doing quite well today. You are following the Hong Kong market. Okay, so the coupling effect is there definitely for between the US and China interest rate. So those to think on that. Okay. So another issue underlying for the headwinds for China is that there's still a very weak consumer sentiment. All right, so China official manufacturing PMI is still at 49.5, that's below 50, so that's contractionary. All right, so it's flat from May, so it's been 2 months straight that is contractionary. Even though the non-manufacturing PMI is at 50.5, it's still down from the May numbers of 51. And you see, generally all of the PMI data shows a contraction in some sense, or at least lower expansion in terms of the various data that they're showing. And one of the very good way to indicate how strong consumer sentiment is usually is through all their shopping festivals that China have. They have a lot along the way. Of course, end of the year, there will be the 11/11, but then now the current one, the most recent is 6/18. I never know there's this festival in Singapore, but in China, apparently it's a thing. And it shrank by 7%, right? So it's the first time it shrank in over 16 years. So in terms of consumer sentiment, it shows that it's not going to be managing to boost a lot of consumer purchase confidence in the short term, at least if there's no swing. Of course, we hope the recent US data will change some of this sentiment and movement into the economy. Okay, so US-China directly, US elections will definitely impact China. All right, so of course, Biden, the age concern is hindering his re-election bid. More and more articles on how his current actions or his current news on him is not very beneficial to his re-election campaign, at least. For Trump-wise, Trump almost announced that he was going to impose more tariff on China for sure if he get re-elected. Of course, he always says things and might or might not be imposed, but he does have a very strong record of giving tariff on China. So that might actually be detrimental. Of course, whether or not there will be another Democrat that come and replace Biden to do the election bid, we never know. So this is currently the unknown factor that currently we have. So the main thing is that China and US, the main direction US is trying to restrict China is on the AI expansion on terms of the advanced technology, especially on a semiconductor. So previously it's already been ongoing, right? You see your Huawei, you see the different China companies that is in semiconductor that was affected, even the China AI companies that are actually limited per se. So not only do they want to limit your manufacturing of the semiconductor, but also on the IP usage on the high tech itself. So that's their US way to slow down China progress in technology advancement. Okay, so of course, with all the different headwinds, we do also still have tailwinds coming up for China. There is still good news that we can look for second half of the year. So first one is that the PBOC actually do announce that they will be looking to do treasury bond borrowing. All right, so when they do this, they are going to release 700 billions of renminbi dollars into the government, into the economy through the purchase or borrowing of these government bonds. All right, so also the CCP, the Chinese government, will have their third preliminary session within these few days, so 15 to 18 of July. And this is usually the session that they actually announce more concrete policies or whatever they have proposed at the start of the year. Start of the year, they have a lot of the proposal, a lot of the asking for views and everything. So usually the July session is the one that they actually come out with a concrete plan to actually roll out instead of just a proposal itself or guideline per se. Okay, so this we expect that there should be some stimulus or accommodative policies that will be announced by the government, and that should help boost the stock market performance. Okay, so this is the details of the treasury bond borrowing. All right, so the sovereign bond performance has been very strong because people have been worried about the stock performance. So when the fund flow goes towards buying the sovereign bond, it causes the sovereign bond prices to go up, the yields to go down, right? So there's very few investors looking to actually buy sovereign bond on a retail level and everything. So the yields are quite low. So they want to control the flow of the credit in the market and also control the yield of these sovereign bonds. So they actually looking to do the borrowing to sell and buy and sell. So basically they have this scheme, something like what US actually did previously, I think through QE, if you think that way. So they want to stabilize the long-term interest rate as well as mitigate the interest rate risk in the short term in terms of the volatility. All right. So they also want to enhance the fixed income investment return for the banks so that the banks can flow the returns to the customers also in a sense. So when they increase the yield of bonds, this instrument per se for the FIs, the FI will then increase the yields for the clients and everything. So it's a whole flow of economical events going on over there. All right, so this is the session coming up, 15-18 July, just to take note. So they normally say that they are studying the reforms and they are looking to promote the Chinese style modernization. Right, so how we translation might sound a bit weird, but basically they are trying to promote their different policies for their modernization of the Chinese economy, right? So it's significant for China's political agenda, like I mentioned. So it's normally the most significant session for the year. All right, so bottom part, you see the main target audience, the segments that will be affected, or the main target points to solve is first the sluggish consumer sentiment. Second is our economic downturn that they're facing. Then you have the domestic real estate issues and local government debt. So if they can target this in terms of separately or even together as a whole, it will help to boost investor sentiment within the economy, also boost their own internal consumer sentiment that will help their local demand, domestic demand, sorry. Okay, so all those are like fundamentals, just like maybe news to you. They can see on the newspaper and on the website report and everything. So this is some of my own views in terms of the support and resistance. All right, so the green zones are the resistance level, all right, updated based on today's performance, all right, and the red lines are the support ones, where you can look as an entry point if you're going to long, or your stop loss if you're already in the long, technically. So it depends on which position you're looking to do. All right, so the numbers I have put there, because the chart is a bit big, right? So basically, just to show. But the main thing is that right now, I think also today, it already rose back above 18,200 plus, right? Back above that level. I believe it was just 17,000 plus, low 17,800s yesterday on Thursday itself. So today itself rose at least 2%, 1 to 2%, all right? Technically, it's a rally off whatever happened in the US market the previous day, and also the interest rate expectations correlation effect, all right? And we do expect that there might be more momentum upside. If you view the middle-term chart, the momentum, the upside swing is still intact. The lower lows have been moving on, and you see the higher highs creating. So if you follow this particular trend, the next higher high, if you really break through for a longer term, I'm looking at 20,500. That's for the middle long term. But this chart, why we so small, is a short term. Right? Short term. So it can be any day, can be broken. Technically, 1,000 movement for Hong Kong is not impossible for one day. But my longer term target is 20,500. Right. So if it does hit there, it actually maintains this particular overall bullish momentum. But for the short term, to stay above, to keep within this bullish momentum, it must first hit 18,500. So if you can stay above 18,500 next week, then you are still intact within the bullish range. If it falls below 18K again and it stays below there for a prolonged period for next week or next week, then it might be a bit harder story for Hong Kong to play out. Okay, so this is a daily chart. So in case some of the investors say, hey, daily chart also quite expanded, very hard to see for trading for short term. So I give an hourly chart for you, right, to see in more detail what are the small movement levels. So you can see the important part here is that the jump up. Yesterday to today is a jump up. It's not a movement slowly to increase over time. They jump up from 17,800 plus all the way straight up to 18K, and they move continuously upwards for most of today to 18,200 plus. All right, so this is the momentum, and if you see, you compare the jump, the shift up, it actually broke one of the levels that I was giving to Jamie to share on what is the important level, right, resistance level. So it technically directly broke that resistance level on this particular swing up. So I had to change it to become a support instead. It was a previous resistance, right, just yesterday itself. Okay. So next we have the Hang Seng Tech Index, so similar to the Hong Kong market. Hang Seng Tech Index is also a very well traded index. So if you don't only trade in the Hong Kong market, you trade on mainly the tech companies. Of course, a lot of them have not been doing very well recently, or this year at least, for year to date, and might not be been giving us a lot of confidence. But I still look at it very closely because I do like some of the companies within the index. And the index performance also have a better story to tell in a sense compared to Hang Seng. But Hang Seng already rose, already made the jump up, whereas the tech index has a bit of still lagging behind. So there might be a bit more room for it to move up if the swing does come in to the Chinese government, Chinese economy side, I mean, right? So you see right now the level around 3,700 plus, right? 3,777 or so, right? Last I record before I left the office. All right, my upside swing target is around 4,880 and 4,100 or so. All right, of course, a longer term target I'll be moving to is 4,200, 4,200. That's a longer term target. All right, but to do so with this, and if you know the tech index competitions, we don't need Alibaba's help because Baba has not been doing very well and it's been holding back this index performance overall. Okay, so of course, compared to the Hang Seng Index, I must mention that Hang Seng Tech Index do have a lot more potential for a pullback, even with the China government preliminary session, because based on the track record, right, Chinese government is not fully just purely focused on economy. They sometimes like to tackle some tech companies that seem to be too strong in the country. So targets have like been Tencent, WeChat, your Alibaba, and Financial, and all that. So there could also be potential regulatory risk for tech companies still, even with this ongoing sentiment that the Chinese government should be boosting the economy, because they could still go on to restrict certain tech companies. So the downside is still intact for Hang Seng Tech Index, so do be careful when you're trading on this. I'm not saying it's a bullish like Hang Seng just now, because in this case, the regulatory risk on the Hang Seng Tech Index is a lot higher compared to the Hang Seng Index itself. Okay, so same thing, the hourly chart, you can see same issue. There's a jump up, right? So one of the main components that assisted in this jump, you can see like Baidu or some of the AI companies, right? Some of the tech companies as well, they've been doing very well. So you can see the movement, right? So you can see sometimes they have been very often that they do a jump up or jump down in terms of the way they trade across days. So this is hourly chart, right? So you will see those gaps where they always jump up and jump down. That's usually between trading days, all right? Between trading days where they reflect the previous overnight market in the US or in the futures market. Okay. Okay, so I'll be mentioning 4 different stock picks, basically just to share, all right? First one is on Tencent, just to share on the sentiment. I think Tencent is a very highly traded counter, and I think if you are interested to trade in the Hong Kong market, you definitely will have considered trading in Tencent before. Almost 100% you have take a look at this counter, even if you do not pull the trigger. Right, so the regulatory concerns on Tencent itself is a lot more eased off compared to Alibaba. All right, so they do have their own changes that they've implemented. So the overall climate is still positive for Tencent, and the new online games have been slightly rolling out a bit more smoothly this year. So you can see that the new games actually boosted a lot of revenue and the performance in terms of how well it has been launching, and that actually boosted the share price performance if you have been tracking Tencent recently. So the overall growth, not only in the games, but also in the advertising segment, will actually boost Tencent to come, I feel, in the second half of the year. So if you're going to watch out for Tencent, how you're going to watch out for significant events itself, look for game releases and ad revenue growth. So instead of looking at pure economical numbers, we're looking at stocks like this, you can actually see on certain tech forums where there'll be those speculation of games releasing. There's always people that give out those games forecasts, like they have some preview of certain games being played by certain beta testers. Then they will share, these are new games coming out from Tencent, very nice to play. So these are news on a forum that might not be very easily picked up in the main news agenda. But if you're trading into counters that have games exposure, definitely you are interested to see these type of forums that are tracking the new games releases. Okay, not only for the handphone app, but also on computer, the games itself. Okay. So this is the Tencent chart itself. All right, so for the stocks, I'm only going to do the daily chart, so they don't have the hourly chart per se. But Tencent, you can see the overall rally after the game release is there for the year. All right, so the year has been doing quite well. Of course, now it's in the consolidation phase. So if you see the way the consolidation phase has been running, the support has been supporting well. The overall momentum swing up chance, the breakout momentum seems to be stronger based on today's candle. And if it does break the next one, which is around 405 to 406, if it does break up beyond that, which was the previous high, I think, in May, which I said May was a peak, right, for Tencent Hang Seng Index. So if it does break that May high, Tencent really has a way to go up back to where it was previously. Right, so they do have the potential to go back up there because they are really earning that much. So it's more of consumer sentiments and investors' confidence in their continued performance. Okay. So whereas for Alibaba is a bit different story. So they have a very fierce competition in the e-commerce market. So the main source of revenue for themselves is still Taobao and Tmall, which is 46% of the group revenue. All right, and they are owning 40% market share in terms of the gross merchandise volume. This is based on their numbers for 2023. And they expect only a growth of 5%. Right, so 5% seems to be a lot, let's say for Singapore or for Western countries, but for China, this is actually quite a small number. And it does show how fierce competition is in China for Alibaba, for in terms of e-commerce growth. Of course, their cloud has been also their other up-and-coming segment that's helping them to boost some of their market price or support market price in a sense. So they are around 37% market share in China, and they expect a growth rate of around 6% or so. So there is still a general high demand in terms of cloud features and also on AI-related products, so that is supporting their segment for cloud. So the main risk that I'm looking out for is a regulatory risk, which is still very much intact in terms of against e-commerce. And likely, I personally feel that the China government will do something about e-commerce because of all the live streaming issues and different news. If you're following the news on the live streaming, having a lot of adverse news based on their online streaming sales. All right. So there might be some regulations coming in on the e-commerce side of things. All right. Investment in a new initiative also will cost them. Right? So Alibaba might take some time. So when they invest for new initiative, it might or might not work, right? But either way, they have to start investing, and then they have to start spending money. So that reduces their ability to fight in terms of the traditional market, but yet they still have to fight on the e-commerce. So one thing you can note is that they actually eased off the pressure on the food delivery app, the Ele.me. They actually eased off some pressure there. So you see why Meituan is doing better, because their competition is focusing on their main source of revenue, which is the e-commerce now. So in terms of Alibaba, they are focusing their firepower mainly now on cloud and e-commerce. But yet they still have to maintain certain level of investments onto their subsidiaries. So that's affecting their overall firepower for their competition strength. Okay. So you see, Alibaba, they are a lot more swinging, right? Not a one way, and where everyone else is on the way up, Baba is still a sideways trend for almost most part of the past year. All right, and their swing is still quite intact. So you see from 64 all the way to 88, this swing is quite a big range also. It's not a small range of price movement. But as of right now, of course, if the general overall trend is upwards for Hong Kong, Alibaba should still be able to tap on this upwards momentum back up to maybe around 80 to 88 level. But it's very unlikely that Baba can go back up over 100 in the short term. Right? So if you see, my target is until 88, and it's really quite a big shift from now. If you're looking at, it's around more than 12% gain from the current closure price. Okay. So Meituan itself, they have actually reported the results on the 6th of June, and the revenue actually rose 25% year on year, and they adjusted to a net profit. All right, so actually, it's I think one of the first few full years that they have a net profit announced for themselves. And then the narrowing losses for the new initiative also, they cut loss in some of their areas and shuttered some businesses that is not making them money. So they are focusing on those that is making money for the Meituan business. And the higher delivery users and launch of, over here now, finish. So they launched some new apps itself for the Meituan, their features. So they have a higher user rate for themselves. So they also have better hotel and travel business performance. So overall wise for Meituan, because of the competition focusing onto the original main source of revenue, end up they have a bit less competition overall based on the magnitude of things, and then they are doing better, right? So of course, when let's say Alibaba or the other competition come back to compete fiercely on the food delivery, there might be a different issue. But at least for second half of this year, I think Meituan is still very well positioned to actually capture this time period where the competition is not ready to fight. So they are actually going to compete quite fiercely within the second half of the year, and that should actually translate to the market share that they have and translate to profits for this year. Okay. So they were one of the worst performers in 2023, but in 2024 they already rose around 90%, right, from the lows of 2024 itself, from low to high. Now it's around 90% gain. So, and they are positioned to continue that positive momentum, all right. You can see, I think in the first quarter of the year, most of the analyst target was 120. And that's like the 1 year target for Meituan, 120. Now closure 122, already booked. And it's only 3 months away from the analyst report. And those are one of the more bullish analyst report that there was in the first quarter. So Meituan have a very good, strong story to tell. And I personally quite like food delivery demand. I see how my China friends have been buying. They really just buy from online. They don't go out to the shops to purchase themselves. Okay, so the last one, of course, we cannot go without touching on EVs. And of course, BYD is one of the champions in China. They are the sales champion for 2 years in a row. And they actually hit 3 million sales in 2023. So to put into context, that's around 60,000 cars per week. 3 million, around 60,000 cars per week. That's their performance that they have for the full year. And they target for 25% sales growth. But for this particular line, I have to give a caution. They are not doing that well this year, even though they still forecast for 20-25% sales growth in terms of the EV and the cars performance. They are doing around 57,000 to 58,000 cars per week recently. So that does not contribute to a growth that you can project for 3 million cars for the full year, right? So of course that is the challenge that they have, but they have a second half of the year to go. So there might be new models coming out, there might be new incentives coming in from the China government to support, especially because Europe side have already imposed their tariffs on China. So China usually will have their own countermeasures coming in, and that is likely what we are expecting also in the July meeting coming up. So we need to see what China reaction is and how that might actually help the EV or the car automobile market in China. Okay, so do note that they have a very high, intense competition even in the EV market right now. So it's not only like you see the Xiaomi coming up and the share price moving up a lot because of the new EV that they released and very high sales on that. But high sales for Xiaomi for a new car maker means that the traditional brands have sales cut out of them. So technically, the whole industry, the whole ecosystem is still a bit compressed. And with the consumer sentiment a bit subdued in China, the overall car demand is not increasing as much. So overall market size is the same, but you have higher competition, means everyone take a smaller share of the pie. So that is where it's a bit harder for BYD to have that sales growth, which I believe if they are still going to go forward to sales growth, what they will do is that they will do price competition. End up, you will get the sales growth, but you will lose in profit. So that depends to see what their target will be to do for BYD. Okay, so also another statistic is that BYD is around 30% plus for the China automobile market. Okay. So this is a chart for BYD. If you like uptrend momentum, this is definitely one of them. For the whole of 2024, the uptrend momentum is definitely intact. All right, upward swing all the way from 1st January of this year all the way up to now, uptrend, and have broken a lot of the resistance that have previously in place based on the previous price movements. So right now, the uptrend continuation is targeted for me to 270. Of course, 270 is a further range. For short term, it's 251 to 253. Okay. So I finished my slides. I will pass time to Jamie. She'll be sharing more on some very exciting features for you. Okay. Wait.
Hi everyone. So clearly, if you had been listening, you will see that a lot of Huan's levels, support levels, are already being hit after the rally over the last 2 days, right, in Hong Kong, China. What this means is that if it continues to sit so nicely above the support level, we do think it's a good entry point, isn't it? The unfortunate part is because you haven't gotten in, this seminar wasn't maybe last week, right, or earlier this week. Unfortunately, it means that the amount of percentage gains that you're looking at from the support levels he's talking about and where current prices are compared to the first resistance level that Huan had highlighted, it's actually not a lot. Some of them are maybe about 1.5% higher from here. Some of them maybe 2%. But if you look at his second resistance levels, that's where we're talking, right? We're talking about potentially, like you said, Alibaba, we're talking about good 10, 11% there. Now, how can you, after today, try to maximize that 1.5% gain or target that he's looking at for the first resistance level? If you're interested to know, you're not content with just a 1.5% gain, and you want to make more, then ladies and gentlemen, you are at the right seminar tonight. My name is Jamie. I'm from Macquarie, Warrants, Singapore. I'm here today to tell you about warrants and how you can use it to make money in the market, right? I want you to make money so that you can come back for these seminars and ask me more about warrants. But let's quickly look at what exactly are warrants, shall we? So warrants are essentially, next slide. Warrants are essentially just like options. This gentleman here was very, diligent. He looked at the brochure and said, hey, the warrants that, they're being painted, the brochure, they look exactly like options. So very sophisticated client here. And indeed, warrants are a form of option. They have a call version, the call option, which moves in line with the underlying. So it goes higher as the underlying goes higher. And they have the put warrant, which operates and works just like a put option, whereby it will increase in price if the underlying price goes down. So it's suited for those who are bearish. How do they then differ? They differ most importantly in two ways. One, warrants are listed on the securities market. They're listed on SGX, whilst options are listed on the derivatives market. Of course, there are some that are listed on the securities market. They are traded, exchange-traded options, but that's not available in Singapore, for example. And because this is a security, this is listed on the security market, it's one of the securities listed on SGX, they are traded on your contra account. What this also means is that you have to put money up front, right, to take delivery of the warrant. And what this means is that even if it goes to zero, your view was extremely wrong. It goes against you. You don't lose more than what you place up front. Whereas with options, you're subject to, because it's traded on the derivatives market, it's traded on the margin account, your loss is infinite for as long as you refuse to cut your loss, which is what I think, which is something, I don't know about you, but which I'm very, guilty of. Because, I love to share this story. I'm so long on China from 2021. I'm down 30%, even with this rally. And because I refuse to cut my losses. And so if I use the option, I would be screwed. Okay, but if I use the warrants, the maximum I can lose is 100%. Now, 100% sounds like a lot, but next slide, please. 100% probably sounds like a lot, but at the same time, next slide. But it's a little bit small, isn't it? 100% sounds like a lot, but at the same time, warrants, if you look at the prices here, they are generally between 1 cent to 10 cents, okay, in Singapore dollars. So what this means is that it requires just a fraction of whatever capital that you have that is invested in Hong Kong stocks directly. So if you're going to pay, $400 for 10-cent shares, well, convert it back to Sing dollars, that's about, that's quite a bit, isn't it? This goes to about $80, $90. But if you use a warrant over 10 cents, it's going to cost you 5 cents, 6 cents. So it's a fraction of what you would otherwise put in Hong Kong shares. And even if you lost 100% of the 8 cents, it can actually be less of a unrealized loss that you're sitting on when you trade 10-cent shares. Agree? If 10-cent shares came down about 10%, the absolute dollar loss that you're sitting on could be more than what you have invested in a 10-cent warrant, call or put. Okay? At the same time, what is nice about warrants? If it's too small for some of you there, the first example is Hang Seng Tech. Now, I've done this month-to-date gain on the Hang Seng Tech, which has risen close to 6%. But if you look at the calls here highlighted in blue, and these are all the call warrants we had over Hang Seng Tech that's been trading on tight spreads, it gained between 37% to 62%. Now, ladies and gentlemen, that is a 6 times to 10.5 times more than Hang Seng Tech. So this is what I'm talking about. If 1.5%, the conservative resistance that Huan has told you, 1.5% from where we currently are is not enough for you. Well, you now have an option, literally an option to use to magnify your gains based on the same target level you have on the underlying shares. Okay, and the put warrants obviously came down because, like I said, put warrants come off and they move inversely from the underlying, right? So if the Hang Seng Tech gained 6%, the gearing effect, the magnified move also will work against you. That's something you need to pay attention to. Now, I sieved out, the top performers on the Hong Kong market because today's theme is Hong Kong Outlook for the month. And Alibaba is one of the top performers, as is JD. They're up about 9% for the month already. And again, this is what I mean, right? If you feel that it's a bit too late, it's maybe JD, Huan didn't talk about it, but you think it's also, again, got just another 3.5% to go. Well, 3.5% is not quite, it's not a lot, right? It's not bad, but it's not a lot. How can you magnify it? You could potentially use the call warrants if you're bullish. Why? Because they move between 5 times to 9 times more than the underlying. Okay, this is gearing at play, whereby you get in at between 1.1 cents or 3.5 cents, your choice, depending on which warrant you pick, and the warrant is going to grow 5 times to about 9 times more than 10 JD shares. And just a note, warrants, just like options, are for short-term trading only. So if you think Alibaba is going to go back to the heydays of $200, please buy Alibaba shares directly on your province platform. But if you think this is going to be, quite short-term, as we know, the Hang Seng is very, very volatile. And Hong Kong stocks likewise, Hong Kong tech stocks likewise, they can hit the 10% in a day or two, right? And if you are not confident that this kind of violent move, it's going to be supported for the longer trend, and you think, okay, I'm just going to trade in and out, because, ladies and gentlemen, if you have been trading in and out of the Chinese market of Hong Kong, of Hang Seng, you will be a winner today, right? Because if we look back at just 6 months ago, if you have been long, you're not doing so well. But if you've been trading in and out, then I think you will do a lot better, right? Because it's not a trending market, and we don't know if it's going to be a trending market, just that it's starting to move, right? So if you're not very confident of the longer term trend, and you're looking for a shorter term trend, you can potentially use warrants for the reason that they are able to magnify the move based on your view on underlying shares. At the same time, they cause a fraction. Well, the other thing I wanted to point out, with regards to the difference between options and warrants is this. Who is Macquarie? Macquarie is your counterparty when you trade warrants, because we are the warrant issuer. Now, with options, you don't necessarily have a designated market maker, which means if sometimes you want to buy an option, you have to wait until there is a seller, okay? But because Macquarie Warrants is the issuer, we're the market maker, and any stock you're looking at, okay, which we have got warrants over, we will be there to provide the buy and sell quotes for you. Meaning you will always have liquidity and prices to get in and out of based on your view on underlying. At the same time, what does this mean? It means that you're not allowed to short. You're not allowed to short the warrant, as you can't naked short on any shares, right? Listed on the SGX. Okay, whereas for options you can write. But again, that's the other important difference. Once you're able to naked sell, what's your downside? What's your downside? Unlimited, right? So if you can write an option, well, you'll earn premiums, yes, you earn time decay, but your downside is unlimited if your view was wrong. Yeah? So these are the two important differences. I hope that addresses your question on what the difference between warrants and options are. Obviously, in my perspective, I think warrants are a better product. It's a safer product for investors. It's a more straightforward product in my perspective. And why would I say that? I'll show you very in a bit. So I've painted other stocks. Geely, you can see Geely is one of the underperformers for the month. It's down 5%. In this case, if you're a Geely shareholder and you have bought the put warrant here, it would have gained from 3.9 cents to 5.1 cents, which is a 31% increase to hedge your downside risk. Obviously, you continue to hold on to Geely shares because you are bullish, for example, right? And if so, you're just worried about, company-specific risks and negativity, you can use, an example of how you can use the put warrant to hedge. Next slide. Another example of how you use the put warrants, as we know. Two reasons. One, the news has, we know Chinese regulators, they tend to sabotage certain companies or the market from time to time. I think right now they're probably not looking to do that, but they have. And not too long ago, just in December on Christmas Eve, they suddenly said they wanted to curb gaming. And that sent Tencent shares crashing 12% on Christmas Eve, right, before they reverse and change their mind. So I think inherently, as Wan Zhi said, the regulatory risk with Hong Kong's tech stocks is still there. I mean, expert analysts like him, they still can't say for sure that China is going to stop doing what they're doing, right, with the curbs. So if that's your concern, I think every now and then, whenever there's bad news coming through, you can consider using a put warrant to hedge. Why? Because it gains when underlying comes off. And I think I can confidently say, Singapore investors don't use put warrants enough. They just watch the market drop. But what do they like to do? They like to go long only. So in the past few years, I think it's been, in Hong Kong, in the past 3 years, when it's just not bullish at all, a lot of people are suffering. But if you ask those who have been trading puts, they are laughing their way to the bank. At the same time, we also know, fundamentally a stock can be very strong, a trend could be there, but the technicals play a part, right? Just because some of you here are going to listen to what Huan Zi said. Resistance levels, oh, I better take some profit here, right? If the whole market is feeling that way, we know that even with trending stocks, there could be very sharp pullbacks. And some people like to think, I like to think that sometimes it's just the market trying to flush some of us out before, you know, it goes well above where we were looking at. And if that was the case, if you're looking at technicals and you think that was a resistance already, and you're a bit scared that, you know, your long position is going to, you know, get a big pullback, big negative drop in the short term, technical or news, company-specific earnings, poor earnings, for example, you can use a put warrant. And please learn to use a put warrant. Why? In this case, as we can see, technically, when the Hang Seng ran up in the May euphoria to about 20,000, where people were getting nervous, and then it had started to show signs of peaking at 19,600, 19,500, you could have considered buying put warrants costing between 2.9 cents to 5.4 cents and taken your profit about 2 months later, 1.5 months later, and still see gains of between 24% to 70%. Ladies and gentlemen, if you haven't picked up on this yet, you notice this second warrant only moved 2 times more than the first warrant, right? 6.5 times more. Why? The reason really is because warrants have got different levels of effective gearing. All the examples that you have seen here, okay, some grew 5 times more, some grew 10 times more, right? So this product, warrants, offer you different levels of gearing based on your risk profile. If you're getting started, you're a bit scared, you think 3 times is enough for you, well, go pick a warrant that's got 3 times effective gearing. But if you think you're extremely bullish, you know, based on you've been observing Meituan, you've been observing Tencent, you think this is the time because it's, and then Huan Zi tells you now that this is above his support level, and you're looking at the resistance levels that he's highlighted, and you think, you know, you're very confident it's getting there. Well, then some people will want to consider high effective gearing, right? So it depends on your risk profile, it depends on your conviction of your view, okay? Next slide. Next slide. So how do you select a warrant to trade? Well, the reason we're partnered with Huan Zi tonight really is because in order to trade warrants, you must first have a view. You must have a view on underlying. Don't ever do your, you know, don't take a view on a warrant by doing technical analysis. That is the worst thing you can do. You're wasting your time. Because why? Like I said, warrants, just like options, track the underlying in movement. And so you must take a view on the underlying itself. You must, first of all, either be bullish or bearish in the short term. If you think the market is just going to trend sideways, please don't buy a warrant because you're only going to pay costs. You're only going to pay holding costs called time decay. You buy a warrant, you consider warrant only because you think it's going to move in the short term. Move to where? That's also important because a lot of people, they're either just, I'm bullish because my neighbor is bullish and then Huan Zi is also bullish, so I go long. But levels, where is your exit level? Where is your cut loss level? All right, where is your exit level? When you enter, know how to exit and stick to it. Okay, and once you have these 3 levels, you can trade a warrant away. Why? Because the levels where the warrants will trade is based on underlying, and my website will tell you exactly where the warrant will cost. And therefore, you put in your buy order on the warrant with the price that my website tells you. Okay, that's step 1. Step 2, you must have a holding period. Well, basically, like I said, warrants are short-term trading products. If you think that this market, it's going to take a few years to go up, you know, then don't buy a warrant. You buy it because you think there's going to be a volatility in the short term. Now, you know, you've got the elections and Biden is, you know, maybe not going to be in the running anytime soon. And if some people, you know, I think there are a lot of analysts out there saying, oh, if Trump wins, it's going to be, you know, chaos for China and US. So if you think these events are going to add volatility, are going to add movement, violent, abrupt movements to whichever underlying you're looking at, then use that to set your time period, right? If you're trading only on these moves, then make sure you hold the warrant only until after the event is over. When you see the volatility, you think it's going to come down from there, exit. Holding period is important because with warrants, even if your view is right, sometimes the warrants can make a loss, and I'll show you why and how later. Number 3, effective gearing. Like I said, different warrants got different gearing levels, okay? So you have to decide which is appropriate for you. Otherwise, later when we go and have a look at the selection process, Hang Seng is going to show you that all 10 warrants are going to make magnified gains. Then how do you choose? Which level of magnified gains are you going to like? At the same time, think about it about your potential losses. Because if a warrant, everyone wants a warrant to grow by 300%, but are you prepared to accept that you could have 100% loss? Okay? And last, always buy a warrant on tight spreads. Okay, please, this is the most cost-effective way of transacting in any security. If Macquarie is not showing tight spreads in the warrants, don't buy. And if we're in the business of selling warrants to you, we would want to keep tight spreads on every warrant, right? So there must be a reason why we're not tight spreads on some. All right? And with that, I just want to quickly show you how to select a warrant using our website. I invented this tool during COVID because I come to seminars like that and people say, hey, Jamie, it's very hard to select a warrant, you know, it's too complex. And so I came up with this whereby all you have to do is put in your view, and at this point I want to share our website. And I want to use Huan's view. Do you all take down some of his levels? Because usually at seminars I see people, you know, taking a lot of pictures, but I feel you all are very calm, you know, memorizing the levels. Either that or you're already in, is it? Already long. Anyway, I'll very quickly test you on some of these levels. I've got it down. I got it from, I was sitting there typing in some of these levels. Do not show again. Okay, so this is the Singapore Warrants website, warrants.com.sg. All right, and I promise you it has everything you need to know about warrants. In order to select a warrant, you go to the Warrant Tools, drop down. You go to Warrant Selector. Okay, let's select the first underline. Which underline do you all want to see via warrant based on the underlines Huan has talked about? Alibaba. Let's choose Alibaba. Do you remember, are you bullish or bearish? Huan is bullish. Okay, so let's choose a call if you're bullish, right? So this is exactly the steps I've been talking about. Select your underlying, you know, have a view, select your underlying levels. Now, call. Okay, Alibaba finished at 78.40 today. Huan's support level was 76 to $77. So this is actually just above, you know, his support level, right? At the same time, do you all remember what was his first level of resistance? This is more valuable than your dinner, no? Nobody remembers, Okay, let me share with you. His first level of resistance was 79.50 to 80.50. Now, not too far away from here. Now, Huan, if you can type in, so select your target price, right? When you enter, you must know where to exit, right? Now, you're a bit cautious about the first level of resistance. So let's say we put in 80. Okay. Now, that's only 2% higher from where we closed today, which can easily happen in the first 5 minutes on Monday. Okay. All you have to do to know and, you know, see how the warrants will perform is to increase the number of weeks here. Because like I said, step 2 is set your holding period, right? But how do you know how long to hold? This tool tells you. Because when you increase it by 2 weeks, this first warrant here, which costs 8.5 cents based on 78.40, in a week's time, if DBS does, Alibaba goes up by 2%, this warrant will go up by 7%. This is how you read it. The second warrant here will go up by 11.6%. The third warrant here will go up by 26.3%. Right? So at this point, which looks like the best warrant? Anyone? If you had a holding period of just 1 week, which would be the best warrant? The third. Yes. But look what happens by the second week. If Alibaba took 2 weeks to move up 2% to $80, the third warrant here will be in the red. So ladies and gentlemen, this is exactly what I want to highlight to you. Warrants are great when they move, you know, your view is correct, right? They magnify your gains rather than 2%. Straight away you get, you know, 13 times more, you know. 13 times more, 26%, that's a feat on any portfolio manager's portfolio, yeah? 26%. However, if it took 2 weeks, this will be down by 5% because of the holding cost known as time decay. Time decay is what you have to pay when you buy a whole warrant. And the longer you hold on to the warrant, the more time decay you pay. At the same time, this, you know, if all it takes actually is for the market or for the stock you're looking at to move higher than where you're looking at. So Huan, what was your second level of resistance? So this third warrant here, if it took 2 weeks, you will be in the red, because time decay has eroded the gearing. But the first and second warrant here will continue to move up by about 5%. But the gearing, amount of gearing, in the past it was moving about 5. 1 week ago, it was moving 5.5 times more. Now it's moving only about, about 2.5 times more. But all it takes is, if your view was a bit more bullish, for the underlying to move more in your favor, and straight away you see, enter, up 12%. This was Huan's second level of resistance. You will see in 2 weeks, it will make 430%. This is the same warrant that was in the red, right? Just a moment ago, if our target was 2% higher from here. But if our target was 12% higher from here, then what is time decay? Is nothing. It's the same time decay that's happening, the same time decay that has set in, but the gearing has eroded or overcompensated for time decay. So with any products that are out there that offers you gearing, there's always a cost to it. Always a cost to it, okay? Whereby the longer you hold, the more you have to pay. Whether it's a CFD, whether it's any other listed leverage stock. So know that. But know also that in the case of warrants, as long as the underlying moves in your favor, the gearing goes up even more. Now we keep increasing this 3 weeks. This warrant will have expired, so maybe you exit out unless this move that can happen in a short period of time and you're very bullish is going to happen, you can consider. Otherwise, you're only left with this 2 and you continue to increase to see what's the maximum holding period based on this view that you can have on this warrant. And you can see as you increase, the percentage gain drops, but it continues to be very geared, more than the 12% you're going to get in the stock. At 12 weeks, this second warrant here is only going to grow 21%. That is less than 2 times the gains in Alibaba shares. So at this point, if you are selecting the second warrant, you must know the maximum holding period for this view is 12 weeks, which is 3 months. Okay, beyond that, if Alibaba is there, please exit. Or if Alibaba doesn't go there, you're better off cutting your losses. So this is how you use this tool, okay, to assess what your maximum holding period is. Of course, with the first warrant here, it will continue to grow by 3 times more. So if you like that proposition based on a 3-month holding period, you can consider the first warrant. Okay? Let's use another example. The more we go through this, the easier it's going to get. Which underlying are you interested in? Those who forgot the support and resistance levels, as long as you name the underlying that Huan has talked about, I have it. So here's a chance to revisit. What? Meituan, who said that? So can you see from there? Okay, Meituan. So I guess you're bullish, right? Meituan today was up 5%. And if you're afraid that you missed the boat, well, the good news is that Huan's support level is 117 to 119. So we're sitting quite comfortably above where Meituan closed today. And if you took that as a sign to continue to remain bullish, right? Then what the levels you are looking at the first resistance is 128 to 130. Again, like I said, it's not a lot, right? Because it already moved 5% today. If we had held this seminar on Thursday, or where we first ran an article about the curbing of short sales in China, obviously then we're talking about 10% gain. But okay, so there's another 6% for you if you want to be conservative. How can you use this call warrant to leverage your portfolio returns, to grow and magnify your portfolio returns? Why is there only one warrant here? Well, because this tool only includes warrants that are on tight spreads. Anything that is wide, we exclude it so that you avoid picking. So there is actually more than one Meituan call warrant out in the market, but this is the only warrant on tight spreads, okay? And obviously, if as markets move, you can keep a lookout as we list more and more call and put warrants. But in this case, there's only one warrant here, and you want to assess your maximum holding period for such a view where Meituan will move 6% higher. Well, a week from now, this warrant will grow about 40%, about more than 6 times more than the Meituan shares. But holding it for 3 weeks, it will only grow by 15%. At this point, you need to be careful because it's only got a 2.5 times gearing, right? And if you increase it to the 4th week, it's unchanged. Can you see? time decay has happened again, and time decay always happens, okay, regardless of your view. But in this case, if your view is up 6%, you need to know that via this Meituan call warrant, you can only hold a maximum of 3 weeks, of which you will grow your returns by about 2.5 times more than Meituan shares. Okay, so this is how you use the selector tool. Any other underlines you want to look at? Hang Seng, HSI, 10 cent, okay, 10 cent. So I guess we're again bullish. So do you remember where the support level was? Today it closed at 397. Do you remember where Huan's support level was? 362 to 364. So this has gone well above his support levels. Is realized. In fact, his first level of resistance is around here. It's about 398. So I think for this 10 cent, you really should be at this point looking out to see if he can cross his first resistance level, right? But how about this? Then let's look at if you were cautious and you think his resistance level could come true, how can we use put warrants? Right, you're still bullish, right? But you think it could come off very sharply. Then you use put warrants, right? Because you think it could pull back from where Huan is talking about, back to the support level of 362 that he was looking at. Okay, which is 9% from where? 9% from where markets currently are. This is a good chance to show how put warrants work and how to select them. In this case, in a week's time, if 10 cent fell by about 8.8%, this second put warrant here will grow by 100%. Your entry level today or on Monday is only 5.4 cents. For the first warrant, it's only 3.1 cents. So again, just a fraction. If you're a 10 cent shareholder, you're like, okay, so close to the resistance level, how can I hedge? Well, you only need to pay 3.1 cents or 5.4 cents for this warrant. At the same time, if it does move down 9% in 2 weeks, this would have grown 100%. Okay, this would have grown about 12 times more than 10 cent shares to more than offset the fall here. Now, in 2 weeks' time, it would grow about 87%, which is close to 10 times more. And all you have to do again is, at this point, you already know the drill. What's the maximum holding period? How can you tell? How can you tell what's the maximum holding period? You increase the number of weeks. You just keep increasing, and look, by the 7th week, this second warrant here that in 1 week, would have grown 100% is now down 13%. So if you're very confident, but if you think and you see the pullback very strong and very sharp, you just need to know that the maximum holding period for this is 6 weeks. And if a 10 cent doesn't pull back to your 362 level in 6 weeks, exit, cut your losses. It's okay, your losses are very small because even if it sounds like 13%, it's only a fraction of your capital outlay. So in absolute amount, it could be very small, okay? And with that, I hope you all get a sense of how to use the warrant selector. I always try to improve on the tools we have based on your feedback. So if you do have feedback, tell me so that I can continue to put out a more sophisticated selector tool. But this is as good as it gets for now. And with that, we go back to the slides. We go back to how much to invest in warrants. Like I've said, they're very cheap. The next slide. This is a calculator tool, which is another tool to find out the time decay, but I don't think with much time. We can revisit this later, okay? I'll just show you very quickly. If you want to know what the time decay is, right? Because we all want to know what the holding cost is. And some other leverage products, basically they charge you every day, right? They charge you and they charge into your P&L. So, some people don't like time decay being part of the warrant value, but it's the same. No matter what, it's just minusing your investment value, right? But how do we know exactly how much of our value will drop due to time decay? Apart from the selector tool that measures your performance by weeks, right? And to show you what kind of time decay is happening by week, I have a tool called the calculator tool that estimates it per day. So if you want to know, for example, this Alibaba call warrant here that costs about 10 cents, 10.3 cents today, you want to know how much the time decay is, or what the kind of holding cost you're looking at. All you have to do is to go to the calculator tool. Once maybe we go back to the website, sorry. Where is the calculator tool? The calculator tool is again on Warrant Tools. and then you go to the calculator. The calculator tool is available for every warrant you're looking at. But in this case, you must know which warrant you want to look at, right? If we go back to the Alibaba warrant, just now we're looking at 1KQW, 1KQ. Yeah, that's the warrant that was in the slides. Okay, so if you want to know, scroll further down. If you want to know how the time decay works, all you have to do is to move the date. Now, this is your entry portion. So today is 12, but then let's look at how what the warrant will be on Monday, right? Because we can no longer enter the position. But if you change the date from 12 to Monday, which is I think 15. No, on the left side, entry, yeah. Okay, we change it to 15. Okay, and on the 15, the bid price will be 8.4 cents. Sorry, it's tiny here, but it's 8.4 cents. We keep everything unchanged and we increase the date. Now on the 16th is 8.4. On the 21st is still 8.4. No, you went too far back. Try 20. Yep. On the 18th. So 3 days later, this warrant decays by 1 tick. So essentially, this warrant will fall by 1 tick regardless of what Alibaba does. Okay, every 3 days. And you must be conscious of this because if Alibaba is unchanged for 3 days and you see the warrant down by 1 tick, you know it's time decay. Okay, don't be so kanchong. Because all it takes is for Alibaba to move. I mean, you know, for some of you, obviously, it sounds like a lot, right? 1 tick every 3 days. Wow, 1 week already down 2 ticks, right? All it takes is for Alibaba to move just a little bit on the right side under exit. Yeah. You see, you just need to move it just needs to move by a bit, maybe $79. Yeah. The time decay is nothing because the gearing will now compensate for the time decay to be up 2 ticks from where you bought it. Okay, it's up 2.4% because the underlying is only up 0.8%. Right? It continues to, the gearing effect will continue to kick in. So this is how you can use the warrant calculator if you want to know what the time decay is. I'll tell you what the other shortcut method is. You can call me on my hotline and I can tell you. Because, you know, people don't like to use calculator, right? The only time we like to use it is when we're on holiday and then we cannot calculate the exchange rate. We whip it out. Otherwise, warrants, a lot of people are a bit lazy with it. Okay, now back to the slides. So how much to invest? You know, I've been saying it's very cheap. But then some of you are thinking, but Jamie, I buy 10 million warrants. It's not very cheap, you know. So how many warrants should you be buying? Next slide. The answer lies in effective gearing. Like I said, every warrant has got a different effective gearing level. Some will have it high, some will have it low. Okay, it's up to you to decide which one you want. But once you have decided, you can then use the gearing level to help you decide how much to invest. Now, this is a Hang Seng put warrant, right? That's you know, listed in the market right now, Y7VW. And this warrant, if you have decided on this put warrant, right, you will know from the website that it's got effective gearing of 8 times and is currently offered in the market for 6.1 cents, meaning you can buy it for 6.1 cents. Now, if you're sitting on a portfolio of Chinese shares, okay, $100,000 of it, Sing dollars, and you wanted to hedge in the short term with a Hang Seng put warrant, because as like I said, Hang Seng is just not been great, right? Every time it looks good, then it pulls back. It looks good. The trend is still not setting in. How can we hedge in the short term? Well, we can use the $100,000 worth of portfolio, you know, that we are holding Chinese shares in, divide it by the gearing level of 8. Why do we divide? Because if we were to buy $100,000 worth of this warrant is going to move 8 times more, you know. So you are not hedging at all. In fact, now you are speculating. You think the market is going to come down a lot, right? So because this warrant is going to grow, click one time. This warrant is going to grow 8 times more. Therefore, you invest 8 times less. So to hedge your $100,000 worth of portfolio, you only need to hedge with $12,500. How many units of this should you be punching into your Poems platform? $12,500 divided by the offer price of 6.1 cents. And you will get around 205,000 units. And you can then key 205,000 units to buy Y7VW at 6.1 cents. Okay, how do you buy it? Exactly like how you buy shares on Poems. You just need to key in the price. You need to key in the quantity, hit send, you're done. Of course, you have to look for the warrant. In this case, how do you look for the warrant? You always identify them by the alpha numeric digit code. They're always, you know, four digit. So in this case, it's Y7PW. Okay, and then before that, I would like to go to a slide before. Yes. Yes, you can. Just like shares, right? Yes. Sure. Yes, yes, yes. Okay. Now, warrants, if there's any takeaway I want you to have after today's session, please don't buy and hold a warrant. All the examples I've been showing you, using the selector, you know, all the examples I've given you, the expiries are a long time away, you know, but your entry and exit are maybe, you know, during the period within the expiry. Don't ever buy and hold a warrant to expiry, because more often than not, you're going to lose money. And you're more often than not going to lose everything. That's the 100% loss. Now, it's very painful to cut your losses down 35%, but it's better than 100%, right? Okay, often what we find as a mistake for a lot of investors is they have the same share mentality. They just don't want to cut loss. And they think as long as they hold to expiry, there could come a time where they would miraculously recover everything. That doesn't happen with warrants, because why? There is time decay. It will keep eroding and eroding and eroding. So there's, unless it's like the market did a 50% or 30% move and suddenly you struck lottery and jackpot, you know, and then you get a lot back expiry. But otherwise, more often than not, you know, there's just no way to get your investment dollars back at expiry. In fact, warrants are a short-term tool. You use it to trade. If you want to invest, you want to buy and hold, please go and buy the shares, okay? Even with futures, it's very hard to buy and hold. You've got to keep topping up, right? So in the case of warrants, well, we have an expiry date, because so that when they reach the end of it, it gets delisted and then we get you know, new warrant, right? And otherwise, you know, at expiry, there's also no more gearing already. Okay, so don't hold it, but just in case you guys need to know, if you just want to hold to expiry, because for some people they think, I've lost so much money already, I will just buy and hope I get something back, you know, really just betting on hope. If that's the case, just know that the last day of trading a warrant is the 5th business day before expiry date. So even though you've got expiry date, so for example, the expiry is end of December, but the last day of trading is 1 week before, okay? Why is it like that? Well, it's not set by Macquarie, it's a SGX ruling. They have to provide for those who like to or tend to accidentally short a warrant on the last day of trading, and then we need to have the buy market for 3 days for them, right? Because if the warrant stops trading at expiry date, then those who accidentally short sell a warrant are screwed. They cannot be subject to the buy market. So this is just a trading mechanism that is, you know, mandated by the SGX. So just know that 2 things: you should never hold a warrant at expiry, but otherwise there is a last trading date. It's all available on our website. There's nothing you need to memorize. Okay, everything is on the website. You just pick like what I told you. View on underlying, find out maximum holding period, look at which gearing looks good for you, and then pick the warrant. There's a code there, and then trade away. All right? How do you cut loss? That's a very good question. Thanks for the question. Now, your cut loss must always be your cut loss level on the underlying. Okay? And we do have a tool called the line matrix tool. Huan is an expert with our website. Huh? So the line matrix tool is another tool that we're the only ones with this, that tells you exactly where the warrant is trading alongside the shares during each day. It's live. So it updates as the stock moves. So in this case, it's a bit small for you, sir, but so today, if you are wondering where would the warrant be if Alibaba went to $79, well, the answer is here. The warrant will be bid at 10.8 cents, offered at 11 cents if Baba was at $79. So like I said, you never have to try to think where the warrant price is based on, you know, your view on the shares. You only need to look at where it will be during the day, of which we have got a live matrix tool to tell you. So if let's say your cut loss on Baba was, what's a cut loss level on Baba? Your first support level? $76, right? Huan's first support level is $76. And it's dipped below and you think, okay, $75, it's not going to make it. I have to cut. Okay? Then just go to this line matrix tool during the day, okay, and locate where Alibaba is at $75. Now, on this line matrix, it doesn't tell you, right? It only tells you down to 77.55 because Alibaba shares haven't gone there. I mean, today it's up, right? But during the day, it will show you. But otherwise, if you think, okay, I want to know roughly how much my loss will be, you can again go back to the calculator tool. So with this Baba, actually, if you scroll up, if you scroll up, there's the calculator tool here. There. Okay? It will tell you what price approximately to cut. So your exit, you have to put $75 here because that's your cut loss point. Okay? And you will know if you entered today, it's going to be about 6.8 cents. You can drag this, okay? Because, it's a bit difficult because today we're Friday, but if you drag this, if you are going to continue to hold it, and it goes to $75 on the 19th, you need to know that the warrant level would be around 6.7 cents, so you can put into the system to queue as a sell. Reset the date. Yes. So I'm not sure how on poems you can set cut loss levels, but with stocks, correct me if I'm wrong, is it you can just put in your cut loss level and like good till done? It will reset every day, right? Every day, right? Okay, so same with warrants. So if today, you see Alibaba coming down, and you think, not a good idea. Like I said, you either go to our website, warrants.com.sg, look at the line matrix, see where Alibaba is, and then put in your order accordingly. So you set the cut loss, right? If you have traded Baba shares, you'll be putting $75 to sell. Same, you just go to the line matrix, you look at where the Baba call warrant is going to be at $75. Because it's all live, it tells you, you can just put the order in. So that if it touches there, you're out of the warrant. Or another method is if you think that's only going to happen tomorrow, or it's now looking very bullish. As we know, Hong Kong stocks can be $79 now, but then can quickly fall to $76 or $75. If that's the case, during the day you want to see where it is, you just use the calculator tool. You don't move the date, simply move the price, and it will tell you where the warrant will be. So you can put it in. Again, if you're confused, just remember you always have a hotline. Jamie will be there to tell you what the price is that you can punch in. Okay, that's my job.
So that means that once you key in the order, so you in the week, you feel not comfortable, you open that same order, and then you key your cut loss structure.
Correct.
Within that order that you already key.
But Huan is saying that for cut loss, you can only put it in, and it's a limit order. It's going to reset daily. So if you put in today, and the level doesn't hit today, but it hits tomorrow, if you forget to put the level in tomorrow, you wouldn't be out, you wouldn't be stopped out. Correct. So that's same as shares. Correct.
Very difficult behavior now to pay attention.
But that's same as shares, right? If you wanted to cut loss and... Yeah, it's only good for the day. But if now you put, if today Baba, you put in cut loss $75, right, today, and it didn't hit, on Monday your order to sell at 75 will no longer be there, ma? Same. Oh yeah, so you have to have additional steps coming to the website to find out where it is. Correct. So it's not for long-term trading, right? So again, if you are okay that Baba is going to go up, well, I would say it depends on how you identify busy. So there are swing traders who do very well. They're very busy, but they know the levels that they are going to pay attention to, within a week. And they put in the orders, they get the reminder to put in the order for them. But if you are talking about sitting down and day trading, I think whether you're trading a warrant or the stock, you cannot have a busy lifestyle, right? Agree? You cannot have a busy lifestyle to be day trading, okay? Any underlying for that matter. So let's be clear about this. The warrant is a means to magnify your view, right? If you have a view and you're not satisfied with what the shares can directly generate for you, you can consider using a warrant to leverage and magnify. Okay? Going back to the slides, we're almost at the end. Okay, so remember, be aware of last trading dates. You now know how to estimate your investment amount. And then we come to how do we get started? Okay, like I said, with Hang Seng alone for call warrants, I can have easily 8 warrants that are on tight spreads. Some people really don't like needing to choose. Women love it especially, like we love choices, but apparently men don't really like that. They like you to tell them which is the best to buy, so that they have to obviously generalizing. But if you're one of those, whether men or women, we do have a shortcut method. We created the FIRE logo, as a way for you to choose the warrant that's got the tightest spreads and the highest liquidity. But bear in mind, it might not be the best for you, right? Because what's best for him is not the best for her, right? So just bear that in mind. But otherwise, the FIRE logo is a good way to guide you. Be aware that the gearing can work both ways. Of course, there's time decay, which you all now, are hopefully aware of. Being aware is good. Being aware of what is not good about product is very important, because then that's the only way that you won't get burnt, right? And to find out how you can use the product in your favor while being aware of the risks, okay? Okay, next slide. How do you get started? Well, I have prepared a slide for those who are interested to see how warrants compare to, say, a DLC and CFD and futures or buying stock on margin. I just want to quickly point out, yes, with warrants, there is the unique feature known as time decay and implied vol. But actually, the concept of time decay and implied volatility shifts is very similar to other products, whereby it will somehow just move lower, right? Sometimes. Whether because of the amount of time you've held onto it, or just simply you're just watching it and it has moved lower because the issuer or the market maker has moved it lower. These are similar concepts. They're just called different things. Okay, at the same time, with warrants, we always track the actual shares and the actual futures. I think with some of these products, they're not in fact tracking the actual futures. Okay, so meaning as long as you're looking at Hang Seng futures, as long as you're looking at Hang Seng Tech futures, you can rest assured the warrants will track them exactly. Okay, it's not tracking like ETF or self calculated kind of index. The cost and fees are just your brokerage, which is probably going to be quite low because the absolute investment dollar is low. The trading fees are close to nothing, and that's all. You don't pay anything else. And with some of these, I think, with futures, there's a rolling cost, right? Not to mention, most importantly, it caps your downside. So for those people who like to say, but warrants are so risky, up 300%, but they're not down 300%. The maximum loss you can make is 100%, but you should never wait for 100%. You should be cutting your losses. Warrants force you to be a disciplined short-term trader, if you ask me. Okay, and so don't wait till you lose 100%. It's okay, if you lose 30%, find an opportunity. Hopefully make 80% buy another warrant to more than compensate for that 30% loss. Okay, that's the whole idea of using the warrant. Okay, leverage, we've got various sectors. Some of the products out there, they are fixed, we are not. Okay, the more the underlying moves in your favor, the more gearing you enjoy. Next. Okay, who can trade this? SIP qualified investors. So if you have traded, I think any of those, you don't want to go and take a test, because none of us would like to sit for a test. When we were forced to do so as children, as long as you're traded an ETF, structured note, or futures, you are automatically SIP qualified. Okay, just based on trading experience alone. If you've been working in finance, you automatically qualify as well. Or if you have got a finance degree, so you don't have to sit for a test. For anyone else who doesn't fit into any of these and you have not traded, SIP product before, unfortunately, this is mandated by MAS. You will have to sit for a test. So go and ask your remisier more about this, okay? Okay, so Huan mentioned the promotion we have ongoing with you. Of course, I know that today's session is not enough, we do have an advanced seminar coming up next week on the 24th of July in the Macquarie office at Marina 1. Again, go to warrants.com.sg if you want to sign up for that. We will have a 1-hour deep dive into how warrants work. I promise to answer all your questions about it so that you walk away feeling confident. Okay? But hopefully today's session has made you interested enough. We've got a Telegram channel, we've got YouTube. These days, you have to be influencer to sell anything. So an influencer with 1-minute educational videos, because nobody wants to listen to me for more than a minute except you guys. So we've got 1-minute videos to touch on specific topics. If that's not good enough, come for our seminar. Well, on Telegram, we will give you, the latest warrant news. Just so you know, on Thursday morning, we ran, once you can go to market news. morning market buzz. Every morning we send out a newsletter. What's so good about newsletter? Have a look at 11th of July. Before Hong Kong moved, we told you to keep a lookout. We asked if you think Hong Kong and Chinese stocks could get a boost, and then bam, market is up more than 5% in 2 days. So, we hope we are able to put this kind of news out for you so that you know and get a gauge of what the sentiment is in the market, and hopefully that helps you to make money. Yeah, if you're sitting there thinking, Macquarie only wants, she's just saying, Macquarie will make money when I lose money. That's not true. I want you to make money so that you can keep using the product over and over again. That's the only way I can continue to make money. But if you buy, you crash and burn, you hold the expiry, you lose 100% of what you put up, you're never going to trade warrants again. I'm never going to get you as a customer again. So that's not what I want. And I'll share with you in more detail on how we actually manage your position such that it's always win-win. Okay? And ladies and gentlemen, thank you once again tonight for being such good attendees. Ask me any questions if you want. Otherwise, I come to the end of the session. Thank you, and all the best in the markets. We're in a very exciting stage, right? US is moving, China is moving. Please make the most of it with instruments that can help you. Okay? Thank you very much.
All right, thank you, Jamie. All right, so I think we only slightly exceeded our original timeline, but maybe we just want to take any urgent questions that we do have. I think we addressed some from the back. Any questions from the front? Any specific burning questions that you might have? So you have no questions currently. You might have questions later on. You feel free to reach out to us or to Jamie directly through the Warrants, the Telegram, as well as the link. Right. So online questions that we do have. All right. So I think there's only one tool that's actually on the Warrants. Maybe Jim, take down first, these two.
Okay. I'll quickly address the Warrants one. How do I determine whether these warrants are fair value, William, that's a good question. So we're the only issuer in Singapore now, but back then when there were so many issuers in the market, knowing the fair value is very important because there were arbitrage trades, there were mispricing. You imagine issuers also make mistakes now, right? There's what we call intrinsic value. I will give you an example using my website, okay? So if we take a look at any warrant actually, a Hang Seng warrant maybe, okay, no, we can't use this, it doesn't show the strike. If you go to warrant search, warrant tools, warrant search, all the warrants are there. Okay, I'll give you an example. Warrants all have an exercise price, okay? And they could either be below where the market is or above. We take a call warrant, William, as an example for simplicity's sake. So right now, Baba is how much? Trading at $78. This call warrant is I don't have a warrant that's cheaper than $78. Okay, let's assume that Baba right now is $88, okay? So this call warrant has a strike price of $79.31. So this warrant is giving you the right to buy, theoretically, the right to buy Alibaba shares at expiry at $79.31. And Baba right now is $88. Right? So you're buying at a deep discount. Close to $8 discount. What does this mean? This means that this warrant will at least have an intrinsic value of this $8 divided by the warrants per share of 14.8. And then you convert it back to Singapore dollars. So I just very quickly use my calculator. So $8 divided by about 15, say about 20 cents Hong Kong dollars, and you convert it back to Singapore dollars. Okay, it should cost around 30 odd cents. This is hard to see now because it's only 3.2 cents. But at that point, if this warrant is less than 30 cents, right, which is what we call the intrinsic value, you buy it because there's mispricing. This is the warrant fair value. Okay, but if otherwise your question is this price that you're showing, the prices you're showing here, Jamie, are they fair or not? The answer is yes, the bid price is always fair. The bid price is always tracking the underlying based on its delta. These are, a lot of these terms you're hearing now maybe sound a little bit foreign because I haven't covered it, but that will be covered in my advanced session, William. So I don't have the time to explain on delta now. But the warrants were always, the bid price, I can promise you they're always fair. Where you think sometimes it could be unfair is because the warrants are widespreads, whereby we widen the offer price to ask you to stay away from this warrant. Why? Because they're highly risky, they're going to expire, etc., etc. I hope that answers your question, William. How do I know the fair price? Okay, the fair price can either be intrinsic price, but if they're out of the money, right? Baba right now is 80. Baba right now is 78, right? So this has got no intrinsic value, right? Because the strike price is 87. So does this mean that the fair value is 0? No, the answer is no, because there is time value in this and it's 5.5 cents. Okay? So distinguish between intrinsic value and what you term as fair. Otherwise, the bid price that we are quoting is always fair. Another question is, as the market maker, what's the typical bid and ask spread? This is Chi Kyong, thanks for that. Any security listed in Singapore that's priced below 20 cents, the natural bid and offer spread is what? Do you know? 0.1. 0.1 of a cent. So if it's 3.2 cents bid, the minimum spread is 0.001 higher, which is 0.033 here. Okay? And so this warrant is on tight spreads. And we always aim to make this kind of tight spreads for you to make sure that it's cost effective. And if you see anything larger than 0.3 of a cent between the bid and offer, stay away from it. It wouldn't even appear under the selector tool. So this is the typical bid and ask spread that we make. Can I exercise a stock warrant? How can I? No, all warrants in Singapore are cash settled. The concept of a warrant is just like options where you could take delivery of the shares at the exercise price expiry, right? But with warrants, you don't, because once you can take delivery of the physical shares, your downside is again unlimited. So all warrants in Singapore are cash settled, whereby if you held it to expiry, right, the settlement, if it has no value at expiry, there's nothing you need to do. If it's got value, we will mail the intrinsic value to you. Okay, so you're not, you can't physically exercise a stock warrant, Alison. It's all cash settled in Singapore. Finally, is your warrant price live and changing during the respective trading hours? Yes, because warrants will always follow the underlying. So as long as the underlying is moving, the warrant will move. How do you know? You go to the live matrix on the warrant tool, and it will tell you exactly where the warrant is moving live during the day. Okay, and then the last Zoom user is these 2 days, Hong Kong rally finally for real. I think Huan can take that. I also want to know, multiple fake moves. Not so much fake, they were real, right? But can they sustain? I think that's the question.
I think the main question is whether it's a sustained or a proper bullish swing up. So I think, like I mentioned, the main thing to note right now is whether it will stay above the next support level, 18K500. So if it does not break above that, then it does not maintain the current real bull trending momentum. So if it stays below 18K, especially go back down below 18K, then it might not be that strong of a move. Especially with next week, 15 to 18 is the meeting, right? So definitely along the way, they'll release a lot of news, so there should be a lot of noise along the way. So for 15 to 18, I personally will try to avoid. Unless you have position already, you can do hedging like what Jamie mentioned, because there might be adverse news coming out from the meeting before the conclusion of the meeting itself. So that's the part where there's a lot of noise going in the market. After 18, you should see a bit more conclusive news from the government of what is the policies. That direction after that should be a bit more natural or long-term for the second half of the year. But if you are a very risk taker, then you can also take part in the meeting days. There should be a lot of nice movement if you are a swing trader. But do think of the risk involved and your leverage involved in using warrants for that. Right? So I'd like to thank everyone for joining us, and I hope you have a nice dinner that we have provided. Probably sponsored by Macquarie. Please clap. So we are sponsored again also in the next slide. Yes, thank you very much. We also thank everyone for joining us this Friday evening, and I hope everyone have a great weekend ahead. We do have a lot more events coming up, and even if you are still confused, not very familiar yet, we do have next one. You can invite your friends along. We have next one is 6th of August, I think, on the US market. So a bit different from what we have today. So maybe your friends or family members that are interested to know more about warrants, you can invite them to come down to join us itself for the next session. All right. Okay, so I think that will be all. If you want to review the session, like we mentioned at the start, there will be a YouTube recording uploaded. Don't need to worry that you missed out any questions. You can review the YouTube when you're free. Go back to the part that you are missed out or you're not sure of and listen to her again. Yeah. Oh, today's slides can email. Okay, this one usually we ask you to refer to the what you call that, like recording. But if you really want the slide, a specific one, you can email us and let us know first. We see which one can go through. Because some of them maybe compliance cannot anyhow send. All right. So best is we will handle that. All right. Okay, thanks everyone. I hope today's session has been interesting for everybody, and I hope it has been insightful for some of you all who have not traded warrants. Once again, the warrants promotion until 31st of September. 30th September, sorry, 30th, not 31st. 30th September, right? Do note, 2 buy trades above 3K, you'll get the promotion of $88 straight cash credit directly, right?